After you did the IPO, let me mention two deals that you did. One was the biggest real estate deal in history, EOP, a real estate company built by Sam Zell. And you did a $40 billion buyout in effect, is that right?
Yeah, it's 39 actually.
Okay, all right, $39 billion. It was a bidding war, you won the bidding war, but the real estate market crumbled right after the deal was done. So how did you survive with that deal?
Well, we worried because the same reason we were going public, I sensed we were a market top for real estate. So just buying $39 billion of real estate, I thought was dangerous because you had to pay a pretty good price to get it because it was competitive. So as soon as we decided we were going to actually raise our price enough to be the winner, there were two or three of us sitting around saying, this deal is potentially dangerous. We've got to reduce the leverage, and we've got to take advantage of the crazy prices that people are paying. So we decided to sell half of what we bought the same day we bought it. So when I told people that, they just sort of looked at me and said, the same day? I said, I don't want to take any risk that the world's going to change and we're going to be stuck with all of this. So we basically had every conference room at the firm active, one, buying, but then we broke it up into all these pieces.
But if you hadn't done that, you would have lost all your money.
I think that's probably
the real estate
case.
market cratered virtually the next day.
Right, so because most of the people who bought from us basically got into enormous financial trouble or went insolvent. And so after we did that and closed, everybody went home, they'd been sleepless. 3 days later, they came back and we said, let's sell half of what we got left now and be even more conservative. So everybody went back to work and we ended up with 1/4 of what we bought, very conservatively priced, so we could survive any kind of nuclear winter. We ended up making 3 times our money buying this giant thing at the top. And there's never been more than $10 billion bought or sold by a group. We did 70 billion.
So you also bought another company before the recession really hit. That was called Hilton. And that was a leveraged buyout, and some people might say at the top of the market. And that deal went down in terms of the debt and maybe the equity, but then you ultimately did things that made it the most profitable buyout in the history of buyouts. What did you do?
Well, that was pretty easy, actually. Looked hard, but Hilton had not been integrated. They were running 4 different headquarters, and there was a huge modernization and cost takeout.
Ultimately, you sold it at about a $14 billion profit?
Yes. Well, if we had held it longer, it would have been over 20.